today we're going to be talking about a stock that has moved up over 12% year to date. However, a lot of those gains have came in the last couple of months as the stock price has shot up over 20%. And this company is none other than PayPal. And what we're going to go over today is PayPal's buybacks. They have exploded in terms of the amount of buybacks that they have done in the last couple of years. And I want to discuss how this affects the stock price in the long term. However, before we start going over all of that, I want to be more transparent with you guys and start sharing one of my accounts. I have two primary accounts. I have this account, which is on Charles Schwab, and I have a Fidelity account. My Fidelity account, I spend a lot more time looking at, and this is more kind of a reflection of what's in that account at a smaller scale. So what I wanted to show you is basically where my positions are at and how they have changed over time. Keep in mind that this was a TD Ameritrade account, so it all got converted over last November. So we have less than a year of data, but right now it's showing $21,000 in gains, up around 77%, and the current value of the account is sitting at $50,000. And again, to make sure that I'm fully transparent, I don't believe that this number is correct in terms of the amount of gains that I have actually achieved through investing. This includes gains from investing, but also how much I have contributed to the account. Here are the positions that I hold within this portfolio: Alibaba, Apple, Microsoft, Palantir, PayPal, SoFi, and Visa. And my top gainers are Apple, Microsoft, and Palantir. Keep in mind that Apple and Microsoft, I actually bought back in 2018. And at that time, this was actually in a Robinhood account that I converted over to a TD Ameritrade account and then eventually got converted over to a Charles Schwab account. And if you look at my cost basis on these Apple shares, I own 4 of them for a total cost of just under $200. That means I was buying Apple shares when it was under $50 per share, which is absolutely insane to think about when the stock price is now trading at $200 plus. And that's very similar for Microsoft here, buying it back when it was around $100 per share, and now it's over $400 per share. My most recent positions have really come within Alibaba, Palantir, PayPal, and SoFi. And a lot of this Palantir stock I was buying about a year and a half ago, and we have seen tremendous gains in that as well. So out of these positions, it makes up around $8,500 of the portfolio. The cost basis on that was just under $5,000. So you're wondering, where's the rest of my money stored? It's in ETFs currently. So about a year and a half ago, I went heavy into a lot of these dividend ETFs just because I saw the market as being undervalued for dividend stocks. And overall, that has returned some nice gains over the course of the last year. 13 to 14% isn't bad at all, but that's where the majority of my money is currently at. Over time, I do think that I'll sell out of at least one of these two ETFs, if not both of them, and move that money into stock investments. Also, keep in mind that I do have a large cash pile on this account, so around $13,000. And this is because, in my opinion, I think that the next year or two, we will see some sort of big drop in the market. I'm talking maybe 10 to even 20%. And at that time, I want to be cash heavy so that I can go into a lot of these individual stocks. So if you appreciate the transparency on this account, let me know in the comment section down below. But let's jump into PayPal. Before we do that, if you enjoy the video, drop a like down below. And if you want to see more videos like this one, make sure to subscribe. One thing that a lot of great companies do is buy back their own shares. And PayPal has really started focusing on this over the course of the last 2 years. They ramped up their buyback program back in 2022 when they reduced their shares outstanding by around 1.5% year over year. And ever since then, they have been ramping up this program continuously. They ramped it up to 2.5% reductions year over year, then 3.5% reductions year over year, and currently they have reduced their shares outstanding by over 6% year over year. However, it's important to keep in mind that buybacks are only really effective when the company is buying back shares at lower than intrinsic value. And this interview clip from Warren Buffett explains this fact perfectly.
Steve Jobs called me one time. I mean, he called me, I don't know how many years ago, but he was thinking about repurchasing shares. And I said, Steve, there's just 2 questions. I said, A, you have all the business, all the money that you need to develop the kind of business that you've got in your head for the next 5 or 10 years. And, he says, we got plenty of money. And then I said, then the second question is your stock selling for less than it's worth? And he said, it's selling for a lot less than it's worth. And I said, well, you've answered your own question. But if he'd answered, we need the money we've got here actually to fully develop our business, and we've got opportunities to do it, I'd say forget about it. Build the new plants and do that, and maybe the cash will come in later where you can buy in stock. And secondly, if he said the stock isn't really cheap, what's the reason for buying it in?
Did he buy back shares after that?
He didn't like buying back shares. I think he was hoping I was going to give him a different answer. He didn't argue with the logic of it, but I think maybe I think he was hoping for a different answer.
In that clip, Warren Buffett is talking about Steve Jobs and specifically Apple. However, the principles apply to any business or stock in the market, especially when you look at stocks that have dramatic drops in their price. When we think about PayPal, we can see that the stock price has fallen over 75% in the last few years. So the question is PayPal trading below its intrinsic value? And if you look at basic PE metrics, right now it's trading at a PE ratio of around 16.68. Compared to the broader market, which is trading closer to a 20 to 25, clearly PayPal feels that their stock price is undervalued. And the second question is does PayPal have the cash around to manage the business effectively as well as provide growth to investors? And from their most recent earnings report, we can see that their cash and cash equivalents is sitting at $18.3 billion. When we compare this to their total debt, which is sitting at $12.2 billion, we could see that they clearly have enough cash around to provide growth, make any sort of acquisitions, as well as manage the day-to-day business. And because of these two factors, having enough cash to run the business, as well as the stock being below what they believe is the intrinsic value, they have returned $1.5 billion to shareholders through repurchases over the last quarter. And in the last 12 months, they have actually bought back $5 billion worth of shares. And these buybacks have an effect on any of their per share metrics. Specifically, I want to take a look at their GAAP EPS metrics. As of this past quarter, they put up a GAAP EPS of $1.08. This is compared to 92 cents a year ago. That means they have been able to increase their GAAP EPS by around 17% year over year. If we discount the 6% reduction in the shares that we have seen over the course of the last year, that means that PayPal has still been able to grow their EPS numbers by double digits year over year. So we can use these most recent numbers from PayPal's earnings report and project out where their shares outstanding could be at by the end of 2025. Right now, they're spending around $1.5 billion on buybacks. I've projected that they could spend that each and every quarter through the end of 2025. We also have to make an assumption of where the share price will be at over this time period. And I have a range of $62.50 all the way up to $90 per share. And that gets us the amount of shares that they could repurchase each and every quarter, which we can subtract from the current total and get us to a new number of shares outstanding, which their current shares outstanding is sitting at 1.04 billion shares. And by 2025, we project that that could be around 929 million shares outstanding. And that gets us to a share reduction over the course of the next year and a half of around 11.23%. And with that, we can use their most recent net income of $1.128 billion in the most recent quarter and multiply that by 4 to come up with a net income of around $4.5 billion, which gets us to an EPS number of $4.85 by the end of 2025. And it's a good idea to validate some of your assumptions by seeing how they compare to what analysts are projecting. And right now on Yahoo Finance, there are 35 analysts covering PayPal, and they have a high EPS estimate of $4.91. So this is actually a little bit above where our estimate is at based off these buybacks. The average EPS estimate, however, is $4.37. So obviously it's important to kind of calibrate against these analysts and see how your estimates come out. When I look at the numbers, I don't think that $1.5 billion will be spent on buybacks each and every quarter through 2025. I think that it's more likely that buybacks will kind of slow down a little bit, especially if we see a big move up in stock price. I do think that it'll probably stay around $1 billion through the end of 2024, and then we might see somewhere around $750 million spent on buybacks throughout 2025. I think that this is a lot more realistic assumption, and that would get us to around 980 million shares outstanding. That would be a 6.32% reduction year over year, and that would result in an EPS of $4.60. So keep in mind that those numbers that we just looked at are the gains in EPS that you would see from buybacks alone. However, we have to consider that net income is also increasing, and we would expect that this will continue into the future. So right now in 2024, we're projecting that net income for the year could come in around $4.5 billion, with shares outstanding sitting around 1.047 billion shares. This means that EPS for the year would probably be around $4.31. For 2025, we're expecting that net income could grow by around 3%, which is actually incredibly low. I think that they could grow a lot more than that in terms of their net income. However, being conservative, it could grow 3%, which would bring their net income to around $4.6 billion. Their shares outstanding, we're saying it decreases by that 6.3% year over year, and that would get their shares outstanding to 980 million shares, and that would result in an EPS of $4.74. And we have this kind of projected all the way through till 2027. But basically what's important to look at is how these EPS numbers come out over time, and then based off valuations that we could see for PayPal, what the stock price could be trading at. In my opinion, PayPal should be trading between a 20 and 25 PE ratio. And what that means is the stock could trade anywhere from $94 to all the way up to $130 by 2026. And this would be a compound annual growth rate of around 40% over the course of the next 2 years in the stock price. So keep in mind that these estimates are a little bit on the higher end when we look at where analysts are projecting over the course of the next 2 years. So you really need to go through on your own and kind of make your own assumptions of where PayPal could come in terms of their net income, as well as shares outstanding, how much buyback dollars they're going to spend on the stock, and really formulate your own assumptions around where the stock is going in the future. For me personally, I do own shares and I'm bullish on the company. So obviously that shows a little bit in where I'm projecting their numbers to come through at. So obviously keep that in mind and don't buy a stock just because I talked about it here on YouTube. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. With all of that said, I hope you enjoyed the video. If you did, drop a like down below. And if you want to see more videos like this one, make sure to subscribe. And as always, guys, have a wonderful rest of your day. And for the joke of the day, we have a good one. What do you call a cow with 2 legs? Check the comments down below for the answer. Thanks for watching.